Focus. Ideate. Innovate. Enable.
Hello and welcome to the final panel discussion of the Financial Advisor Forum's 2014-15 presented by UTI Mutual Fund and CNBC TV18. I'm Sumit Lakhotia. Now throughout the series we've got our experts to talk to us about the issues and the challenges that are faced by the mutual fund industry in India. Today we come to you from Pune, which is known as one of the fastest growing cities in the Asia-Pacific region. And joining me now on this panel are Mr. Christopher Luzardo, who's the partner in Trust Advisors LLP, Mr. Leo Puri, Managing Director, UTI Asset Management Company, Mr. Ashish Mehrotra, Managing Director, Country Head, Retail Banking, Global Consumer Bank, Citibank India, and finally, Mr. Sanjay Sanghvi, CEO and Founder, Indus Capital. Welcome to the panel, gentlemen. Your advice, being a manufacturer in this case, as to how IFAs out there should maybe talk to people to tell them that don't worry, there's an up, there's a down, there'll be an up again. Stay invested for the long term.
It is one of the oldest truths that exists in the investing business, that whatever happens, you must stay invested through the cycle. And it is very well backed in terms of empirical evidence, not just in India, but in virtually every country that you look at. Staying invested through the cycle is the only way that you can be certain of actually getting the kind of returns that an equity market would typically return. Part of the role of a financial advisor is to act as an emotional counselor as well as a technical advisor, to keep fear and greed within boundaries and to counter that natural human psychology as much as possible. If they're good advisors, they'll at least modulate that, and their clients will do that much better.
You've been in this line for many, many years. You've seen a lot of people. What's your experience? How do you get that behavioral switch?
You need to follow a disciplined approach. You need to ensure and understand as a client what your risk appetite is. During the time, the crisis, how often do you engage with the client? Are you able to reassure? Are you able to educate? Are you able to help him deepen? Are the core pieces where the engagement defines the trust and the confidence which you're able to build in the retail investor.
How, in your experience, should IFAs talk to their clients about the importance of setting goals and also about reviewing them again? Should that be every quarter or every half year? What's your advice on this?
I've seen a lot of time the IFAs themselves are not convinced about the product. So once that comes in, it is very easy to communicate to the client. Secondly, we need to talk with a lot of passion. Passion has to come while advising. And we have to tell them, see, this next 10, 15, 20 years is the India growth story. And we have to participate in this growth story. So that's very important. You can't just consume things and not be a shareholder of that company.
Do you think there are too many products out there that confuse the retail investor or the everyday man investor?
Well, there are different segments in the market and there are products that are suited for certain segments. And one of the ways in which mis-selling occurs is simply to take what is otherwise a good product and sell it to the wrong segment. So it's products and segments to be aligned, and it's no more complex than that.
Mutual funds are great for every option. So whether you want to take almost low risk or whether you want to take high risk, there is a mutual fund there. Is that getting out there to people?
It's important for the advisor to see what components of a person's saving and investment basket, which he already has, can be matched with a mutual fund product at the outset. If advisors can stick through a couple of cycles with their clients, they will be able to themselves perceive what different components in his portfolio is doing for him.
The real estate sector has boomed a lot here. How do you kind of talk to them about saying that don't put all your eggs in just the real estate basket, look at mutual funds and other options?
Clients need to be made aware that you can't go overboard on real estate also, neither you can go overboard on the equity side also. So because world over, there are two asset classes only, real estate and equity, where one needs to be to beat inflation. I feel that the equity portion is the key. Debt, either you get 7, 8, 9, that's it. You might go for a liquid or any other product. But the equity thing is the main thing where one should be educated.
There is a lot of scope to go because Pune is a growing city. Your thoughts in how should this be brought about? What are some steps that need to be taken to get more retail exposure? Currently, I just want to talk about retail exposure in
Okay, I think this is fundamentally you need to really appreciate that there is a large amount of cultural bias towards physical assets, correct?
Yes.
Whether it's gold, whether it's real estate. Core pieces to it, to my mind, is to do with financial literacy, financial education, and the reach out and the role played both by the distributors and the IFAs in reaching out to clients and providing them and helping them in achieving their financial goals. I think that's the way.
How can technology be used to reach out to make it easier for people to invest?
What happens with technology is that if you provide technology as just a platform or just as a website, it may increase the propensity to transact.
Yeah.
It may make a person take a shorter term view. And therefore, the person may not extract the maximum benefit of that technology. So technology has to be combined with guidance. Be it an IFA or an institution, somebody has to be guiding that person who's using the technology for a couple of market cycles.
There will always be two distinct segments in the market, a self-directed segment that may wish to deal directly with a manufacturer, and a much larger segment which will wish to be intermediated or advised. Even if they can use a technology platform for execution, they will clearly consciously seek a level of support and advice. And that's been, by the way, the experience in all countries, including countries which have a far deeper digital penetration than India, that the fact that you have technology and digitization happening and mobile, broadband, and so on, does not reduce the fact that there is a need for this advice-seeking segment to continue to use a platform of, in a way, B2B2C. And I think advisors need to adapt to this, therefore, rather than feel fearful that somehow technology spells disintermediation.
You're watching the Financial Advisor Forums 2014-15 presented by UTI Mutual Fund and CNBC TV 18. It's time for a very short break. Don't go anywhere. We'll be right back. Welcome back. You're watching the Financial Advisor Forums 2014-15 presented by UTI Mutual Fund and CNBC TV 18. And today we're coming to you from Pune. High net worth individuals have emerged as the fastest growing investor segment, growing at a rate of approximately 20%. This was between the period FY10 and FY13. So, your thoughts on how is this trend coming about? What's happening in this sector, the HNI sector?
I think this sector has been growing, if you look at it, at a CAGR of about 13%. And the forecast is that it will grow at about 15%. Today you see about B15 is about 13%, and you go beyond it, it's 2%. It's hardly anything. I think that's where the entire crux of it's about the conversation we are having to do with financial literacy and to do with the distribution and advisors to play an active role in creating and building this asset class. The reach can only happen with the way we embrace technology, like Mr. Puri spoke about, and the role played by everyone in both in driving financial education, literacy, and the role around the advisory and the distribution.
What are some pointers that IFAs should keep in mind so that they can smoothly transition from not just being transactory but advisorily enrolled to their clients?
I think one of the first thing one should do is to get into the client's shoes and try and understand his needs. I think once you do that, things become simple. So what is good for him is more important is what is good for the advisor. So I think if that is the priority, I think automatically things will be in place. Of course, the first meeting is very crucial. He needs to be educated thoroughly about all the negatives first. Positives, everyone knows, okay, you'll get this return based on past performance. But I think what is negative has to be told very clearly and upfront. And I think things have to be more transparent. Advisor should demonstrate if he's suggesting a product, whether he's ready to put his money.
How should you handle that when clients come to you and say that, no, I think this is to be done, and no, let's sell and let's buy and let's do this and that so that I can get the best of it. You don't know what you're doing, I think I know better. How do you handle that attitude at times?
Well, yes, there is an overload of information. You can't get away from it. There's TV, there's newspapers, there's magazine, and everybody has an opinion.
Correct.
And you can't really veto the opinion of the person sitting in front of you. I mean, at the end of the day, it's his hard-earned money which he's putting into his portfolio. If you follow an approach where a portion of the portfolio can be buy and hold and not constantly traded, and you don't have to demonstrate activity by trading a portfolio at all points of time, you are able to get the intrinsic return which a product can deliver. And even within the mutual fund industry, you'll be amazed to know that a lot of products have developed, have given you a 20% compounded growth rate over a period of 20 years, which is phenomenal. All you've had to do is stay invested in it.
Like Warren Buffett said, it's not timing the market, but it's time in the market.
Absolutely.
I have some figures which said that assets under management recently went past the 12 lakh crore mark, or 20 billion, for the first time in Feb 2015. And equity funds also showed positive inflows for the 10th month in a row, again in Feb 2015. What will we be like in March 2016, next year?
I will give you two predictions, one of which will certainly be wrong.
Well, okay, sir, we'll take both.
Yeah, well, there is still a possibility which you can't discount, that we may go through a period of, I would say, global turbulence over the next few months, in which case, to be absolutely blunt, it would not surprise me if we were somewhere in the region of 0 to 5 in either direction.
Right.
And there's another scenario in which global factors continue to be benign. India continues to be a beneficiary, and then in all probability we will end up at 30%. There's a very much higher likelihood that we will be at 0 or 30, given just the level of volatility that I anticipate over the course of the coming year, only a part of which is within India's control. There are just too many factors that could go wrong here, which is why, not being facetious, I think it is a very wide range that we are talking about next year.
Okay, I won't grill you more on that for the time being then. Ashish, now I'll ask you to look back. Let's retrospect. How was this financial year, 14-15? How's it been for the industry?
I think this has been an excellent year for the industry. You spoke about the numbers themselves. The numbers are telling a story. I think two things I would like to talk about. It's important, especially both for the community per se of distributors and advisors, and for the retail investors, to follow a goal-based approach rather than chasing the absolute return. The markets will behave the way it will. While I'm sure Mr. Puri has a crystal ball will give us a clear prediction, I'm not too sure which way the markets will move.
Yeah.
So our approach is that you continue to follow a goal-based approach, do risk profiling, do asset allocation, and more importantly, periodic review and rebalance if required is a must. I think that's what it is. The markets will behave in a manner, but as an individual, as a distributor, as an advisor, our role is to ensure that we educate and we engage with our clients and help them in achieving their financial goals.
How important is it to have, like, maybe every 2 years, every 5 years, a refresher course, get an extra certification? How important do you think in this line is that, or is just experience a good enough thing?
Ongoing education, self-education, is a very important component of what we do. In fact, these turbulent years, I would say that a lot of the community has actually matured into doing a lot of introspection. A lot of people have actually spent a lot of time in possibly like doing a few modules of the CFP. A lot of mutual funds have invested time and energy in educating us on other facets of investing.
Right.
Also, as we build portfolios which are a little bit more diverse in terms of, for example, international diversification, it's very important for us to continuously engage with partners who bring knowledge about those markets to us. Because ultimately, as we build in those and look at possibly the foreign exchange risks embedded in the product, it's very important for an IFA to be educated about that before he can take that to his client and build it into his client's product.
Of course.
So I think it's going to be something which you have to do for the rest of your career.
On that note, it's time for a very short break here on the Financial Advisor Forums 2014-15, presented by UTI Mutual Fund and CNBC TV 18. But after this short break, we go over to the audience as they put forth their questions for our experts. Stay tuned. Welcome back. You're watching the Financial Advisor Forums 2014-15, presented by UTI Mutual Fund and CNBC TV 18. Joining me on the panel today are Mr. Christopher Luzardo, Mr. Leo Puri, Mr. Ashish Mehrotra, and Mr. Sanjay Sanghvi. What are some of the challenges that you are seeing, that you think are hindering this push of the mutual fund products to the B15 cities?
Actually, at the moment, it's going very well. In fact, there are not too many challenges other than our ability to build distribution, build infrastructure, provide some continuous empanelment, and the market is growing. So certainly, I mean, as UTI, our experience has been very positive on B15. I think it's a supply-side challenge, if you ask me, because it takes a while to empanel IFAs as you keep moving, and you have to allow maybe 2 to 3 years for them to become self-sufficient economically and to really be able to support your business.
The Jan Dhan Yojana will also help this process down the road, you think?
Yeah, Jan Dhan Yojana is a very powerful way of bringing people into the banking system.
Correct.
Ideally, as they say, JAM. I mean, Jan Dhan, Aadhaar, and mobile, and you get digitization, you get identity and KYC, if you like, capability, and then you get bank accounts. Now, that should, in theory, be the ideal fertilizer for growing the capital markets in this country. And I think unless we really mess it up, I'm very optimistic about the growth that will happen in these centers.
So, Sanjay, if I could just get I have one last question for you. I spoke to Ashish earlier about his view on the industry in retrospect, how the year has been for the mutual fund industry. I'd like you to take a little bit more of a micro view. How has it been for you for you and maybe more for the distributors and the IFAs? How has it been for them this last 1 year, and what are some of the expectations they have for the year ahead?
The year has been fantastic. But it's a function of the market. So what has happened? We have to move away from this function of the market. You will have a 5 years, 6 years bull run. I'm talking about the equity portion. And then there will be people who will be entering at the last leg. And they will have a bad experience.
Yes.
And the next bull run, they'll again won't come back. So the whole, the way the whole thing is, I would say, sold is not the right way. We need to tell them it's a 10-year, 15-year, 20-year product. And see, the government also will have to do a lot of things. What they'll have to do, it shouldn't be just a product where, you just try and capture the ups and downs of the market and, enter and exit and people having good experiences and bad experiences. There has to be some retirement sort of solutions where, you get benefits. I think a fundamental shift has to be there.
Thank you so much. That was really interesting. So we've got some takeaways from here. It's definitely most important to have a fundamental shift. Behavioral change, even from the IFAs, maybe they need to shift from just being a transactory to advisory. Thank you so much, gentlemen, for being here. I have some questions here with me, which we took from our audience. First question is from Janak Shah. He's with Sapient Wealth Advisors. Who will bear the brunt of the service tax? Let's throw our hat into the ring on the first shot. Let's catch the bull by the horns.
As an industry spokesman for a minute, I would say that we understand that this is a burden that is somewhat sudden on the intermediary and IFA community. We will really try and understand whether there is any way to look at any form of burden sharing that might soften the impact and perhaps avoid a simple direct transfer to the distributor. What we'd like to see is that there's one solution across the industry.
Okay. Next question from Dr. Anand Sathe. Christopher, if you could take this. He says, how is MF Utility likely to impact the mutual fund distribution for retail distributors?
Ultimately, we need a platform which is going to help us to make transactions simpler. Whether it's MF Utility or some other platform which will come about, I think it's a time of wait and watch.
Next one is Surendra Shetty. Where do you see new IFAs performing in the next 5 years in the mutual fund industry? The SEBI is pro the trail model and not the upfront fees model.
The shift is from people coming from the bank side or, from the AMC side also people have started this. So these are all qualified at least. They understand the market. It's not someone who's just coming new. He has a reasonable idea about what things are. So I think they will do extremely well. I think, there could be different views. But going forward, the trail model looks good. But yes, there has to be a balance for a lot of people. There are people who are going to start fresh and they would require the initial capital to sustain for some time till they don't build up the AUMs. So yes, there has to be a balance, and which I think they are doing it. So let's see. We have no role except for speaking. Whatever will come, we'll have to accept it anyways. So I might say whatever I want.
Mr. Puri, if you could take this last question. It's from Mr. Bhushan Mahajan. He says if commissions earned while promoting mutual funds are justified, then why should we promote direct plans? Because already when the broking industry became transaction-based, investors got converted to traders. He's worried that the same thing might happen in this industry.
So I don't think it is as black and white as saying that if people are operating on a direct platform, that is somehow opposed to the idea of a role for advisors. In fact, I would just end on a note of saying that this is about the most positive environment there has been in a long while for the mutual fund industry and indeed for all of you as advisors. Overall, I think there's plenty of money to be made in this industry, and most of that money will come from growth, not just from margins. It is true of any industry that if you only focus on margins, this has been true of telecom, it has been true of many businesses, true of banking, you tend to get trapped very quickly. Ultimately, you have to think of growing the pie, whether it's within your client base, whether it's within the portfolios you currently have, or it's expansion of your client base. So the growth is what is going to create tremendous opportunities for all of you. And I see a very, very positive outcome and very bright future for our industry, as well as for, I think, most of you who are partners and distributors to the industry. So please don't get unnecessarily depressed or carry fears in your head which are really not warranted. These are good times indeed for all of us. Thank you.
Okay, thank you very much. Thank you, gentlemen, on that positive note. Well, that's all on this edition of the Financial Advisor Forums 2014-15, presented by UTI Mutual Fund and CNBC TV18. And what a journey it's been. We started off in Jaipur, then went to Hyderabad, on to Bhubaneswar, and finally today in Pune. But stay tuned to the channel, because very soon we'll bring you the Financial Advisor Awards 2014-15, where we'll be felicitating and honoring the very best of financial advisors in the country who help the Indian public create wealth for themselves. Until next time, from the entire team, many thanks for watching.
Focus, ideate, innovate, enable.